Good evening. Welcome to another edition of the ShadowTrader Video Weekly. I'm your host, Peter Resnicek from ShadowTrader.net. Short-term bullish, long-term bearish. That's what I see as the dichotomy going on in the markets right now. We'll get into the details of that and I'll explain fully in the video. Hanging man at the top of the box. What exactly does that mean? That's how last week's chart pattern formed in the weekly charts. I'm going to show you the details of that. Market profile nuances. This past week was one of the best weeks, I think, of the year thus far for trading market profile. I got so many compliments on the blog this week from futures traders, stock traders, long-term traders, short-term traders. Everybody telling me that the signals that the market profile was giving this past week were just spot on. I'm going to go over some of those nuances with you in the video. I'm going to show you all the information that I share with my subscribers every single morning in the hopes that maybe you'll subscribe to my blog and that this information will be helpful to you, because I think it's been very helpful to me over the years. Last but not least, I'm going to leave you with 6 stock charts that will possibly be in play next week for trade setups. I got 5 bullish, 1 bearish. I think you'll like all of them. All right, without further ado, let's get into it. Okay, so starting with this SPX daily chart, we can see clearly, obviously, we're in a slow grind upwards. Everything seems pretty bullish, and this is where things get interesting, because there's somewhat of a divergence, I think, kind of a split between what these charts are showing on the daily, which is this slow grind up, and when you flip to the weekly, showing us just how long we've been up and how steep it is. I want to reiterate this point from last week, where I mentioned that the market is up 9 weeks in a row. Certainly it could keep going, but just keep in mind that when things are very, very steep like this, that's when larger liquidation breaks occur. And when I say larger liquidation break, it could be something like this. Like, this is probably a liquidation break. It's hard to say that there are really new money sellers in here, because when you look at it in hindsight, the market just ground higher after that. Obviously, it looks like, because the candle is so big, it looks like more than that. You know, this is more of a situation of new money sellers in here, because you have this break here and then more breaks in here and then another big break, right? So liquidation break is more like something that's in the context of an up move, just kind of comes out of nowhere and can last anywhere from 5 to 15 minutes to a half a day, but in some cases could be longer, right? There could be like a liquidation break that lasts 3 or 4 days or a week, and a lot of times that'll come out of a very bullish pattern like this one, where really, really overextended. So I just want to kind of point that out to people in terms of new longs, because I fear that a lot of people commit longer term money to the stock market at wrong times, basically, as they kind of commit it at the end once the market is already way up, and that can be dangerous when the market is on such a steep incline as it's been. So given that we now have a 10 weeks straight up, we've just added another week, and this is not that bullish of a bar this week. This is interesting that at the end of that 9-week up move, we didn't really move this week. Notice that the open and close of this bar is relatively equal, and it is also what is known as a hanging man. That's important to note, right? When you have a sort of a doji like that, like a bullish hammer, really, it would be at the bottom of a range, but at the top of the range, it's called a hanging man. It's actually a bearish pattern when that same doji type pattern appears at the top end of a range. The tone kind of switches from bullish to bearish. So keep that in mind. That is there. But again, while all this is happening, it's really hard to make the bear case. It really, really is. Everything is just very, very status quo, just a slow grind up. I talked about the VIX in recent videos. And what happened on Friday? Break lower again, back to a double bottom here. So, I've been saying that it does appear that there's potential for the VIX to move back to the 11 to 12 handle, and lo and behold, look what it's doing. Volatility just keeps dribbling lower, and that definitely supports higher asset prices. This is a sign that the fear just isn't there, and we could easily go a bit higher. Let's just take a quick look at some of these other majors before I get into some more nuances. NDX looks about the same, and if we flip to the weekly, we have the same thing. We have a little bit more bullish bar in that it's green and closed a bit higher in the NDX, but still a hanging man nonetheless on its 10th week higher. And last but not least, take a quick look at the RUT. Staying on the weekly, again, same thing. You have that same pattern at the top of the range, and again, tying in with the top here, right, with that retracement after the break. So also possibly longer term, maybe overbought, but in the shorter term, the daily charts look great. Okay, one of the things that I've been talking about this week a lot, coming into the gap up on Friday, is the nuances in market profile. And I want to point out some of the stuff that I've been writing in the pre-market blog pretty much all week, kind of just talking bullish every morning and just saying that the move down over the last few days, that it really wasn't anything, that when we came in here like Tuesday, Wednesday, Thursday, I was constantly reminding people every morning of all these different nuances that were pointing to the fact that the selling really wasn't strong. And that, I think, is the real holy grail, if there is one, to following, to being able to trade short term, but even also being able to trade long term, to know when a day that is red on your screens is really a day when you should be getting out of longer term positions or not. And everything that was happening in the course of this week was really very clear, I think, from the nuances in the profile. I'll show you in a second that there really continue to be a lack, I should say, of longer term sellers in this market. They're just not there. I'm going to show you a recap, which is from Friday's pre-market perspective. This is the blog that I come out with every morning, and this has really gotten super popular as of late. Like in the last couple of weeks, it's really blown up a lot, and I really am not going to rest until pretty much every single person on Earth reads this. So, I mean, I'm off to a strong start, but I've got about 6 billion people to go, but I'm going to just keep pushing it. The nuances that I'm talking about here, when we were looking at the opening gap on Friday, I was pointing out that these were some of the things that were happening all week. And these are things that I'm pointing out every single morning. I'll show you in the few issues before this, but notice that we had lots of liquidation breaks here. We had prices moving lower intraday, but the value was constantly overlapping. What does that mean? That those yellow areas in the profile, they're overlapping. They're not clean breakaways. So that tells you that the fair price to do business, where lots of futures contracts are trading, is basically remaining the same more or less every day, right? If there's a paradigm shift where prices get much lower, then that value area is going to shift down much lower. 4 poor highs in a row in need of repair. That's a nuance. I'll get into that. I'll show you exactly what that means. We had an excess low on February 27th. And then last but not least, the gap this morning, and again, this was written on Friday morning. This comes out at 9 a.m. sharp every day. I said the gap this morning is a breakout of a multi-day balance and also yesterday's tight range, which was an inside day. So what does all that mean? So essentially, the poor highs are these areas here that don't have excess, right? An excess high or low is one that looks more like this, where you have single prints showing you that sort of capitulation at the end of a move where it's very emotional. There's usually not a lot of sellers there. You can see I often talk about what I call the taper. And that's why you see these numbers getting lower at the lows, right? That's very typical. So you have that excess low on the bottom. And along all of the tops, you have, as I was saying, you have poor highs. What are poor highs, right? Poor highs are the lack of excess. So what does that tell us? That basically when you have the poor high, prices want to back off from the poor high, but they want to back off usually pretty gently. And the reason this is so is because it's really only shorter term traders that got stuck at the top of the range that are causing that poor high. They're what you would look at as nervous longs. They're the ones that create the poor highs. The poor high is created by nervous longs because every time prices come up to that high, they sell, and then they come up to it and they sell. They don't have that longer term conviction in the market. So essentially, that is why poor highs usually get repaired. So when you see a poor high, you want to think to yourself, okay, the market's probably going to back off first. That's what we've been seeing for the majority of the week here. That was the Tuesday, Wednesday, Thursday action. We kept getting these poor highs backing off, but then at the same time, you always want to carry forward in your narrative that those highs are going to be repaired. So that's why I was bullish going into the end of the week. That's why you probably got that email of the SPX risk reversal trade of the week, right? Looking at starting on Wednesday, selling puts, buying calls, looking at that 28.05 to 28.10 target by the end of the week. It's because of all of these nuances there. And these are all things that I teach every single morning in the blog. And again, I really highly recommend checking it out. It's definitely priced right. It's only $1 a day. It's very cheap. And it just really gives you a phenomenal framework for the things you should be looking at every single day. And if you just go through these, pretty much every single morning, starting, I'll just go back to the 27th. You can see in every single one of these, obviously those of you that are subscribers have already read it, but I'm constantly mentioning all of the things that would give you an idea of what's going to happen in the current day and the important things that you need to keep in mind. A lot of people think, oh, this stuff is like so nuanced, or I don't trade futures, it doesn't matter. I couldn't disagree more with that. This is all information that is extremely valuable to just having a good feel for where the market's going, what the market is doing. So when I write in the blog, I say, look, we have 2 days in a row now of overnight inventory, 100% net short. Again, that's very, very important. What does that tell you? That tells me simply that the overnight players have all transacted all their business below the prior day's settlement. So here's those 2 days, right? 2 days of overnight inventory, 100% net short. What does that tell you? Like, you tell me, what do you think the market is going to do on those days? The market will usually retrace that. And those days need to be carried forward. They're very, very important because you have these overnight players that have basically built up the short inventory position, and they need to cover when the bell rings. But the problem is not all of them cover when the bell rings. There's still some of them short. So when you have 2 days back to back, and then the next RTH session, which is this yellow one, right, goes a little bit lower, correct? It's no surprise that we actually closed at the high of the day on that day, right? Because you have these individuals here short overnight, 100% short overnight, but at the same time, are they really getting paid? I would say no, because look, these are short overnight, and yet this is what happened in the regular trading hours session. These people are short overnight, and this is what happened in the regular trading hours session. They obviously got screwed, right? And that brings us where? Then to Thursday, which is what? A very big balancing inside day where all of the activity is inside of the prior day's value area, right? So these are the nuances that I'm discussing every single morning. And, you know, just going through this, again, it was basically just talking bullish all week and really pointing out all these very, very important nuances that would lead to understanding that the market is not selling off very hard and probably wants to go higher, right? So before I get off that, I'll just leave you with one last part here, which I made this joke over the course of the week that a lot of people liked. I said that you could have like an E.F. Hutton moment if you, were at a cocktail party. Those of you that are old enough to remember, you know that there were those E.F. Hutton commercials saying, hey, my broker is E.F. Hutton, and then everybody in the room stops and goes silent. They want to listen. And earlier in the week, I was saying that, if you had your E.F. Hutton moment, you could say something like, well, I follow ShadowTrader, and he says that although the market did just make 100% retracement of the October to December move, and we've been 9 weeks straight up, and we have possibly just looked above a 5-day balance and failed back into range, he's showing me lots of signs that stronger sellers aren't emerging at all. So at this juncture, it's more than likely that the last 2 days are just reacting to the poor high from 225, and the trend remains up. And that was written on the morning of 227 at 9 a.m. So these are the types of details that I delve into every day. This is the narrative that I follow every single day, and I do my absolute best to put as much information as I can in here of everything I'm seeing so that we can get a better idea of not only what the markets are going to be doing that particular day, but how is that going to feed into the larger narrative, and where does that get us for the longer time frame? Because I know a lot of people trade the 2 to 5 day time frame. Some people are swing traders or position traders with even longer time frame outlook. It all matters. All of these nuances are like the Russian nesting dolls, where it's a little bit of information inside of a bigger piece of information inside of a bigger piece, and it all matters and gives us the most complete picture of the markets that we can get. All right, so before I leave you guys, I'm going to give you a couple of trade ideas here. I'm going to show you a few stocks that I've been looking at recently, rather. One of which, I'll just start with NVCR, because if you recall, a few weeks back, I said that this is my #1 pick for 2019, and it did have a breakout this particular week. It was a breakout week. 54 was the level, and so it's looking great. I think I talked about this a few weeks ago. So it has now started breaking out, showing phenomenal relative strength to the market, I thought, and obviously a big move straight up here on Friday. So that looks good. Secondly is Apple, which is really kind of boring lately, but I'd have to say that the pattern does look bullish here. It's kind of like this rounded bottom cup, and you have this obvious resistance here at the same levels. If you look at this high here, it's 175.57, and this high is 175.87, and this high on Friday was 175.15. So obviously 176 is a trigger point for this week to push the shares higher. That's Alpha Alpha Papa Lima. You might have heard of them. Booking.com had a very ugly Thursday because they reported. You can see there is their earnings per share. And the stock was down $210, I believe, at the lows. Something like that, 209. And then up 17 on Friday inside of this range. I am short calls currently at 1765, which is this level here. My thesis is that over the course of next week, up until March 8th, the stock will not rally over this high. Usually what happens in booking, this kind of happens over and over in this stock, is that it breaks down big on earnings, and then it'll go a little bit sideways and just dribble lower, and usually it'll come to a prior support point, which in this case is just above the 1600 level, and then it'll start back up. It'll have a climb back to the upside. Next week, I think there could be a short below the 1690 level, so watch that level. That's 1692 actually for a continuation. This was a huge volume move down, obviously, on the earnings, right? You see it there, like double the average volume, maybe even more, and this is probably just short covering here that is balancing out some of this short inventory. Obviously, there was huge shorts from overnight taking it down there. Then the shorts piled on even more. So there does need to be some balancing here. So I wouldn't be surprised if after a couple more days of balance, we see a break of that 1692. The longer that you balance here and then break 1692, the better. Like if you could give it at least 2 or 3 more days sideways and then break, that would be fantastic. Okay. Amazon, another stock you may also have heard of. I just wanted to point out that it does seem to be perking up. There's a longer-term trend line here. The really long-term trend line is here at 1900, but there's a secondary trend line here and coming right to here. We're in the low 1600s, and it actually closed above it. I think the stock was showing a lot of relative strength on Friday. And last but not least, actually, I'm going to leave you with 2. These are both IBD 50 stocks. One is called Five Below. I was actually long this with my weekly option subscribers on Thursday when I saw that it made the double bottom. Then Thursday was the triple bottom, and it didn't lose that low. So we said, okay, we're going to have kind of a right or right out trade, and it worked okay on Thursday. Then we gapped up on Friday. And what I didn't like about it on Friday, so we actually got out with a tiny loss. I think we lost 20 cents on the calls, not a big deal. But it had a look above and fail after this little balance area, so we gapped up and then traded down through. I think that's bearish. Also notice that it's now at the same low of the 119. So obviously this is short-term bearish, but I do believe it is long-term bullish. And now that it does appear imminent that we break down below this low, I'm going to keep my eyes peeled for the 50% and the 61.8 retracement levels for a long. And a similar stock is WellCare, WCG, which is also right at its 50 right now. This is also IBD 50 and has the 61.8 here at the 246. So I would be looking at either of these. Hopefully, I prefer the 61.8, but these are possible buy points in WCG. I bring up these 2 specifically because it is relatively rare that you see a pullback in these IBD 50 names. All right, that's all for this week. Thank you, as always, for watching. So let's just have a little recap of where we're at. Again, remember, market has now retraced 100% of that prior up to down move. We're back at that top of that box range. On the daily charts, it still looks very, very bullish. We're just slow grinding higher. Certainly the VIX, which I've mentioned in recent videos, continues to crank lower, and it looks like it's possibly headed down to that 12 to 11 handle, which is just really, really complacent. So there's no fear out there. But on the other hand, the weekly charts are definitely overbought. Hanging man on the weekly doesn't bode well, and also the fact that we're now 10 weeks straight up on a very, very steep incline is just something you should keep in mind. So those of you that are trading with a little bit more longer term outlook, I just want you to keep that in mind and be careful out there. All right, on behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.